first guest on the show now. S&P Global Ratings last week upgraded the rating on upgraded the credit rating on Tata Power from a BB plus to a BBB minus, accompanied by a positive outlook. The company calls out extraordinary support for Tata Power from Tata Sons Private Limited. To talk more about it, we've got Neel Gopalakrishnan, Director, Sector Lead of South and Southeast Asia Infrastructure Ratings, joining us on the show now. Neel, morning, and thank you for joining in. This is Reema here. First, take us through your call behind upgrading Tata Power.
Good morning, Reema, and thanks for having me on your show. Firstly, this was not just an upgrade of Tata Power. We reviewed all the rated Tata Group companies that we have for the potential that extraordinary support that we had factored into the ratings could be stronger than what we previously anticipated. Now, the question you might have is, what led to this review or what's changed? And that's a perfectly logical question to have. And what we observed has been that in the last few years, the group has become more cohesive, both strategically and also operationally, with greater operating linkages between the various Tata Group companies and also between Tata Sons and the operating subsidiaries. This greater cohesion to us indicates greater long-term commitment as well as incentives to support. And that led to the review of all the Tata Group companies, including Tata Power that you mentioned.
Got that, Neel. So the question is, we understand your viewpoint that this is an overview of the entire group and maybe greater support anticipated from Tata Sons. But specifically speaking about Tata Power's debt profile and how you're expecting perhaps the cost of servicing that debt to shape up, because they are going ahead with an aggressive capex plan, right? They're adding a lot of capacity on the renewable side, big plans afoot. So what's your sense in terms of the increase in debt levels that we may see over the coming years, and then the ability to service that debt, and now, of course, this new, better rating?
Sure. The company does have large expansion plans, and this is not something specific to Tata Power. We see utilities across India and indeed the wider Asia-Pacific region having significant expansion plans, particularly in renewable energy to execute the carbon transition strategies. Specifically coming back to Tata Power, while the company's capex is high and this would consume a large part of its operating cash flow, what we also find is that the company is managing this risk by phasing out its capex. So, for example, we don't see a very large capacity expansion being planned in a very short period of time. If you just look at renewable energy, we expect about 1 to 1.5 gigawatts of capacity being commissioned every year for the next few years. And given the company's growing cash flows, which is also benefits from capacities being periodically commissioned, this is quite manageable. Purely from a debt perspective, we do expect debt levels to increase modestly from where they are now. But the leverage should still be well within the levels that we expect for this level of a standalone rating.
And what is that level? I mean, the level of gearing that which is within your expectation range for an entity like Tata Power?
So one of the metrics we look at is debt to EBITDA, and we think around 4 times is a pretty reasonable level. In fact, in the utility space, where you expect cash flows to be very predictable and stable, you could even say that 4 times is fairly comfortable level to be at, 4 times debt to EBITDA. And the company has also stated that while it executes this expansion plan, it will keep an eye on leverage, and debt levels should not increase very significantly from where they are now.
Neel, going back to the first point that you made about greater cohesion between all the Tata Group companies, the greater operational integration that we could expect. What exactly would it mean for Tata Power? Can you give some examples of what you anticipate how this will play out in the near future?
Sure. Maybe if I can take a step back and we went maybe 7 or 8 years back, our impression was that many of the Tata Group companies were operating very independently or in silos, if I can use the word. But in recent years, there's been a lot more integration and the companies working together to realize synergies within the group. And more recently, this has got accelerated by, I think, two main developments. One is the electric vehicle business, which is focused on by Tata Motors and its 100% subsidiary JLR. And the other is the carbon transition strategies that the entire group is implementing. And that is where Tata Power has become involved in a big way. So Tata Power specifically is involved in setting up a lot of capacities for the other group companies. And on the electric vehicle side, it's setting up a part of the charging infrastructure which would support the electric vehicle business of Tata Motors. And also we see the company bidding jointly for electric commercial buses, for example. So there's a lot of integration within the group, and Tata Power is a key player in that integration.
Okay, and just one final question. Typically, when we see a credit rating to the tune that you have given Tata Power, what's the interest rate savings? Is it a 50 basis point cut that we should expect, say, from Tata Power? Typically, if you could give us, how much does it help the rate of interest, the rate of borrowing for companies?
A couple of things here. One, the cost of borrowing is a function of market and the broader interest rate. So at what cost companies borrow depends on where you are in the interest rate cycle. And the second thing is our rating is an foreign currency rating. And where Tata Power would benefit is on offshore borrowings. Whereas currently, if you look at the company's borrowing profile, most of it is onshore. But what an investment grade foreign currency rating does is, one, it improves sentiment. So it may not necessarily lead to lower borrowing cost onshore. But if the company chooses to borrow offshore with an investment grade rating compared to a BB+, it opens itself to a much wider pool of investors some investors who may not necessarily look at sub-investment grade issuers. And just for the benefit of audience, when I say investment grade and sub-investment grade, any rating that is BBB- and above is considered investment grade, and those below are sub-investment grade. The most recent rating action took Tata Power from BB+ to BBB-, which is the lowest rating on the investment grade scale.
Okay, all right. Neel, we'll leave it on that note. Thank you very much for joining in and sharing some perspective on the reasons behind that ratings upgrade that you have assigned to Tata Power. We'll take a break on that note, come back on the other side and discuss everything that's hot in the commodity markets. Manisha will join in.